Hi everyone and welcome to this new video. Today we are going to talk about pivot points. I am Alessandro, one of the coaches at Unger Academy. I often notice that there's a lot of confusion regarding indicators. Traders often tend to overestimate the performances that these indicators produce, and also tend not to backtest the signals generated by the indicator. I want to investigate further, and today we are going to make some tests on a varied futures basket to evaluate in a statistical way whether there's an effective edge in trading with this indicator. Pivot points identify levels of the market on which prices may react. They are the product of mathematical formulas that I want to tell you are really simple and easy to understand. We'll see them soon. They can be used in different ways with different approaches, both trend following and reversal, and we are going to evaluate which one is better and if in general there are benefits arising from this indicator if compared to a more classical approach. Before starting, do not forget to subscribe our channel, click on the bell to be always updated with our new contents. If we plotted the pivot points on a daily chart, we will see something similar to this. They are calculated once a day, regardless the time frame used. They identify points, as said before, that will be updated once a day and not bar per bar as happens for many other indicators, as they are related to the values of the day before. Let's make an example and let's try to simplify this concept by doing an example. On this bar, we want to try to calculate pivot points of this bar signed with the blue arrow. The formula of the pivot point is calculated as the arithmetic mean of three values, referred all the three to the session that has already ended. In particular, we'll need the high of the day before, the low of the day before, and also the close of the day before. As we can see in this bar, the high is set here at this point, the low of the previous bar is this one, and here we have also the close of yesterday. If we transform now daily bars into intraday bars, we'll see something similar. In this case, we have just split previous daily bars on a higher frequency time frame, so we can go more in the details. We can go ahead and calculate and see how pivot points are calculated. As said, the pivot point is calculated as the arithmetic mean of three values, high, low, and close of the day before. And there are also two levels called supports and resistances that are also called S1 and R1, and they are just the product of 2 times the pivot point minus the high of the day before for what regards the support, and 2 times the pivot point minus the low of the day before for what regards, of course, the resistance. There are also two more levels, support 2 and resistance 2, calculated as the pivot point minus the high-low range of yesterday for support number 2, and the pivot point plus the range of yesterday for resistance number 2. There are also in some cases support number 3 and resistance 3, but we'll not see them as they are not commonly used and they don't provide any significant signal. So let's make now an example to better visualize this indicator. we know that we need three values, the high, the low, and the close, to calculate the pivot points. And in this example, we have the high of yesterday at the value of 100, the low at 90 points, and the close was at 94 points. Knowing that it is really easy to calculate the pivot point, it will have a value of 94.67. Now that we have calculated the pivot, we can find the support 1 and resistance 1 levels, respectively at 89.34 and the resistance at 99.34. The theory behind this indicator tells that when prices approach these levels, they may react and provide signals for our trading systems, both reversal and trend following. So now let's have a look on how these two types of strategies, reversal and trend following, behave on a varied futures basket to see which one is better. Now we are seeing the portfolio trader of multicharts. It is a very useful tool to conduct this kind of tests, as we can combine many instruments with a single strategy to see how it performs on the whole basket. In this portfolio I've put different underlyings. There are energy futures like crude oil, heating oil, RBOB gasoline and natural gas. There are also metals like the gold, equity indices like the DAX, for example, or the mini SP 500, but also commodities and currencies like soybeans, wheat, British pound and euro. Basically, all instruments are different, and this will allow us to test our strategies properly. We'll start with the more classic idea of the pivot points, the reversal on the support and the resistance, and we will close the position at the end of the day. As we can see, I've already created these strategies. There are, of course, some variables here to find the pivot points, so we need variables to calculate all the levels that we saw before, and also the levels that we need to calculate the pivot itself, so the high, the low, and the close of the day before. We will equalize this variable to a function that identifies the levels that we need, so the high, low, and the close of the day before. This one in the parentheses means how many days back we want to find the level. And here we just replaced the formula that we saw in before. So my pivot, my resistance number 1, my support number 1, my resistance number 2, and my support number 2. I also added conditions. Here we can see that if my trigger, there is an input, we can use it as we want, and if it is set at 1, we will use as long entry and short entry the support number 1 and the resistance number 1. Instead, with the my trigger equal to 2, long entry will be equal to my support number 2, and short entry will be equal to my resistance number 2. Here, finally, we have the entry conditions. We will enter as set at the long entry level and at the short entry level with limit orders. And at the end of the day, we will close our positions. As we can see, the code is really simple, and with this command we can close our positions at the very last bar of the session. Okay guys, now we are back at our portfolio, and we are going to see the performance report. Unfortunately, the results, as we can see now, are not satisfying at all. We were expecting a very different result, and looking at the equity curve, we are not happy, of course. The average trade also is negative, of $15, and in general we can say that the strategy loses money constantly. So what if we use the opposite idea? I mean, if the strategy is losing money, if I flip the entry conditions and change them from a reversal entry to trend following entry, the logic says that we'll see some profits. There are, of course, many other possibilities to trade this kind of strategy by adding more triggers, for example, and playing around pivot points levels to see if there's something that fits better than this. We'll see some of these possibilities in the second part of the video, where we'll test them to see if there are any improvements. Okay guys, as said, the first part of the video is over. It was pretty theoretical, but also with some practical examples. In the second part, we'll pick up from where we stopped. Now I let you digest these notions, and I give you the appointment to the next part to find out more about this indicator. I hope you enjoyed this video and that it gave you good insight for your trading systems. I would like to remind you to subscribe to our channel by clicking on the bell below to be always updated on new contents. Under this video you will find also a direct link to one of our webinars, that it is completely free, and it will show you how to create your own portfolio of diversified strategies. Thank you for your attention. See you in the next videos.